first of all, MicroStrategy is a publicly traded company, and we have a public disclosed strategy, which is we acquire Bitcoin, we hold Bitcoin, and it's a long-term strategy. And it's very important for us to be transparent and committed to our strategy. If I told you that our strategy was we acquire real estate in London, commercial office buildings in London, and we hold them forever, and you were an investor of mine, and you wanted to have 5% of your portfolio invested in London real estate, then you would want me to stick to that strategy. And if you ever saw in an interview that I said, I like London, but I'm also buying, vacation villas in Ibiza, and I'm buying container ships in Brazil, you would think, I can't trust that company. I don't know. I don't want to own container ships in Brazil. It doesn't matter whether you made money or lost money. You need to be true to your strategy and committed if you're a public company. And the public markets reward you for integrity, right? I want my steel to be steel. I want my rubber to be rubber. I want my glass to be glass. I don't want you to mix those three elements. I'm the architect of my future. I will mix the elements. So MicroStrategy is just 100% committed to our strategy, and we like that strategy, and we can't find a better strategy. With regard to the rest of the crypto ecosystem, the world wants digital property, and digital property needs to be a commodity without an issuer. And the great shining example of creating a digital commodity is what Satoshi did. No ICO, no pre-mine, disappeared, never monetized it, not influencing it. If there's no issuer, then it starts to look similar to gold or wood or lumber or wheat or land. It's a commodity. That's very important. The world needs clear regulatory clarity with regard to what all the other tokens are. So if I want to create another digital commodity, I need a way to get it endorsed as a digital commodity. The other day, Gary Gensler went on CNBC and he said, the only token I'm going to speak to is Bitcoin. And I'm going to say Bitcoin is a commodity. I don't want to give an opinion on the other tokens. But so what are the other tokens? Well, a stable coin might be a currency. If I put $1 billion of cash equivalents in a bank and I issue $1 billion of stable coin tokens, and I can redeem it one for one, and it's fully collateralized or over collateralized, then maybe that's a currency if I can meet the requirements of the OCC, or the Treasury Department. The world wants a digital currency, right? There's $1 trillion demand for digital dollars. People want them desperately. They want them in Turkey. The short-term inflation hedge in Turkey, right, is the digital dollar, right? If you want an inflation hedge for the next 4 weeks or 8 weeks. So there's a massive demand for tokens that are digital currency, but there's a big difference between, say, UST. UST might have been 1% to 5% backed, right? Like it literally was under.
It was algorithmically backed, yeah.
Yeah, or not backed at all. Versus Circle. But if you're a conservative investor, you don't want to hold Circle or Paxos. You want to hold an FDIC issued endorsed stable coin where you have JP Morgan's balance sheet behind it. So we're early on in the industry. There's a massive demand for currency, but it's hard to figure out how I create one. How do I create $100 billion of digital currency that will be universally accepted? And so there's a little bit of, there's uncertainty there. And there's massive demand for Tether because people need it. And if you live in Turkey or if you live in Afghanistan, you'd rather take your risk with Tether, a private company, than what is the alternative? Trust the local currency. So then you've got, digital tokens, NFTs or tokens. What are they? How do I define one? What am I allowed to do? There's a bunch of different rules and there's a lot of murkiness and people aren't sure, but we know there's excitement, but there's a lot of uncertainty. And then you've got digital securities. There's a tension between the 20th century and the 21st century. In the 20th century, you want to go public, you plan for 3 years in advance, you spend 20 or $30 million, you file 1,000 pages of regulatory filings, and you become a public company and you can sell your stock to the general public. But there's two problems with that. Like MicroStrategy is that we came public in 98. There's two problems. One problem, it's very expensive. It takes a lot of time. We have an army of lawyers and accountants, and we spend $20 million a year just staying compliant. And the second problem is you can't buy and sell our stock on Saturday afternoon in Thailand, right? And so the crypto industry has solved this problem. They're like, here's a fast way to create an equity-like token, and you can trade it 24/7, 365. So I think even the most conservative regulators, they acknowledge 24/7, 365 trading is good. Being able to do things from the palm of your hand, with a mobile app with lots of functionality, that's good. Digital dollars and digital currencies, digital euros, whatever, moving at the speed of light, that's in demand. That's good. Digital property, like a commodity, like Bitcoin based on proof of work without an intermediary, is an innovation. It's a brilliancy. That's good. Everybody agrees on that. Now, the question is there a way for me to create a digital security that doesn't take $30 million in 3 years and $20 million a year to maintain? And is there a way to put it on a crypto exchange trading 24/7 in Singapore? Because, on a holiday in America, we just we can't shut down the world just because Americans decided to have a holiday, right? Right? And Sunday's a working day in the Middle East, right? But in America, we just shut stuff down on Sunday. So there's a tension. The 21st century wants to be global, real-time, speed of light, quick and easy. The 20th century, it was like we're segmented. You've got something that is expensive that trades in the American market, but not on Labor Day. And we don't really offer a solution to the rest of the world. But the world needs a solution, right? The world needs currencies that are inflation hedges, like the dollar if you're in the peso. The world needs currencies as a medium of exchange. I need to be able to trade with someone in Africa while I'm in the US on Saturday afternoon. How do you give a job to someone in Asia when you live in New York City if there's no medium of exchange, right? The world needs to trade. It needs security. It needs to be able to store its money for 100 years at low frequency, and it needs to be able to trade its money every second at high frequency. And that is the beautiful dream of the crypto industry. And the regulatory challenge is, how do I do this? If you're a publicly traded company in the US, well, you have to do it consistent with United States regulations and guidelines. If you're a private citizen in Afghanistan and the banks just failed and you're running for your life, totally different set of rules. So every entity, whether you're an individual family or whether you're an expatriate or a refugee or whether you're a private company, if you're a private company in Asia or in Africa right now, different set of ideas and different set of guidelines than if you're a public company and if you're a government. So I think that the safe haven for everybody everywhere, right? The O positive of crypto is Bitcoin. It's the universal donor. It's safe for everybody because as a public company, I can hold it for 100 years as property and I don't have to worry about what are the currency rules, what are the KYC rules, what are the leverage rules, what are the trading rules, et cetera. I don't have to worry about that. So that's the simple safe haven for institution and conservative investors. But all of these other things, they're all moving to different degrees of maturity, and we're waiting for the SEC, the OCC, the CFTC, the Treasury Department, the IRS to get educated And I believe that as they're educated, we'll see more guidelines, more clarity, and that will expand the available group of investors that can enter into each of those other asset classes. Right now, it's really more of a venture capital thing in many cases, because you have to have a high risk tolerance and you have to be a professional.